Professor Khan, what is a fixture?
Okay, a fixture is a type of goods that have a relationship with the real property. Now, there is no precise definition of fixtures under Article 9 or under any law because fixtures, the definition of fixtures, the concept of fixtures changes from state to state. So wherever you're practicing law, you will find out in that jurisdiction what things are considered fixtures and what are not considered fixtures. But for Article 9 purposes, for secure transaction purposes, a fixture is a type of good that is related to the real property and that is governed both by Article 9 and the law of real property. So fixtures are, under the shadows of two laws, Article 9 as well as real property law.
When you say that fixtures are governed by real property and a mortgage, how do you sort that out?
Well, I think what happens is that a typical contest that is going to arise will be that some real estate lender has financed a building or has given loan and obtained a mortgage in a building or in land. And probably that lender is going to have a clause that all fixtures which exist now or which shall be replaced or which shall be put new later on, all those fixtures are part of this real estate transaction, and the real estate lender has a mortgage not only in the building but also in the fixtures. So that's going to be one, transaction. And the other transaction is going to be that probably the owner wants to replace some fixtures or the owner wants to, install some new fixtures. So they're going to go to some, real estate, some other lender and say, could you, give us a loan or could you finance a fixture? And now, we're going to have two lenders. The prior lender who has financed the building or who has given loan against the building, and then the new lender who has financed the fixture or given loan against the fixture. And when the owner defaults on both of these loans, then the question is who has priority in the fixtures, the real estate lender or the fixture lender. So that's where the typical competition is going to come about.
Now, you've explained how we create the security interest with a security agreement. How would you perfect that on a fixture different than perfecting a normal security interest?
Very good. I think in the case of fixtures, there are two methods to perfect the security interest. One is the traditional method, which is that you file a financing statement in the central office of the jurisdiction, mostly the Secretary of State's office. And that's how, most security interests are perfected, that you file a financing statement. So you can do that with respect to fixtures, but this sort of perfection is not going to help you against real estate lenders. So if you want to protect yourself against real estate lenders, then you have to file in the county office where the real estate records are kept. So this sort of filing is called fixture filing. So fixture filing is different from the regular filing. In the case of a fixture filing, first of all, you file in the county where the real property is located. So you don't have the freedom to file in any county. It's going to be in the county where the real property is located, and that's where the furnace or the fixture is. Second, in addition to providing the information like the name of the debtor, name of the secured party, the indication of the collateral, you also need to describe the real property. upon which the furnace is located. So I think if you do that, then you're giving notice to people who lend against real estate that you have a security interest in the fixtures, and by doing this fixture filing, you have perfected it.
Okay, and besides furnace, what are some other examples of fixtures that might be common to real estate and personal property?
Yeah, you see, the fixtures can be anything. It could be machines in factories, it could be, it could be even copiers, what they call trade fixtures, which are very easily removable. So don't think that a fixture is always something which is bolted down to the floor or to the ceiling or to the walls. Probably it is in many cases. But there are fixtures which are easily removable. And even those are, subject to Article 9 and sometimes to real estate law. So fixtures could be carpets, fixtures could be, windows if they're easily removable, but sometimes the windows are not easily removable, and so they become part of the realty. So I think it's a very, case-specific sort of understanding. Yeah, that's a very good question, and I think the purpose of Article 9 is to provide competition rules, so that if there's more than one interest competing and there's not sufficient value in the collateral to pay off all the competing interests, then you have to allocate loss. That is the purpose of competition rules. So in the case of a fixture, if the owner has defaulted both on the real estate loan as well as on the fixture loan, then we'd have to sort it out. And the general rule is that mortgage is superior to the security interest. In other words, the real estate lender has a higher and superior right to get their money back first, and the fixture lender is going to be second. But you can beat this general rule, and I think the recipe for beating is that instead of just giving a loan for the fixture, you actually give a fixture-specific loan, and you obtain not a security interest, but a purchase money security interest. And as you know, purchase money security interest is the darling of law, and therefore, if you obtain purchase money security interest and then perfect it by fixture filing in a timely manner, within a few days, 20 days, then I think you will be able to beat the prior mortgage. And thus, if default occurs, you will get your money back first.